Hello my fellow freedom builders and welcome back to the channel. Today I have promised you a little video about which stocks I am looking for in the current market. Not that I'm buying right now, but which stocks could be interesting. You will get that. I hope I'll get around to do it later today, but I need to get this little video off my chest first. As always, my name is Hans Nielsen. I'm here to help you to secure some of your money in the market. And if you like what you see here, please remember to subscribe to the channel. That would mean the world to me. All right. First of all, today the markets are going up. That is great. People are feeling some sort of relief after this absolutely insane drop that we have had in the market. This is the S&P 500. You can see here that over a 4 weeks period, we have lost 27%, something like that. That in itself is crazy, and I usually say to my customers and my subscribers that you cannot call yourself a real investor before you have witnessed an event like this. An event where, you know, this is something I will talk to my grandkids about if they start investing and saying, yeah, I remember in 2020 where the market dropped out of the sky 30% in a month. So this is one of these events, no doubt about it. What people tend to do is they love to compare it to the financial crisis in 2008. But if we look at the charts, it is very different. I'll show you that in a second. First of all, I will give you a little advice. What I can see here today in the media picture is a lot of financial so-called experts. And they are calling the bottom. They are saying, now the stocks are too cheap and now we will see the bottom. You know what? They don't know. I don't know. I know they're experts. I'm not always sure what they're experts in, but what I ask them, if I meet one of these guys saying, I know this is the bottom, I can see that, then I always ask them, did you also call the top? Because if I'm talking to a guy, if I'm talking to a guy that did call this top on these exact days, saying this is the time we're going down, then I would listen to him if he said this is a bottom. But of course I know there are these gurus saying this is the top, and they said it here and 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 here, and of course at some point they will be right. But if he wasn't one of these so-called gurus, and he actually for the first time in a very long time said this is the top, then I would listen to him here. Otherwise, don't listen to them. They don't know. If they knew exactly where the bottoms and the tops were in the market, they would not be analysts earning a few $100,000 or maybe only $100,000 per year. They would be sitting on their own luxury yacht somewhere, owning their own island. So don't listen to them. All right. Of course, as with someone with a financial channel, I will give you my idea of if the bottom is there. But I promise you, I will not try to pretend that I know it for sure. I'll just tell you a bit about what I can see in the structure of the market. So right now we have 2020. Let's just scroll back to 28, 7 and 8. That's where the last big crash was. I hope you can see a bit of the difference here. Because what we saw at that time was we have had a long up run here, not as long as we've seen here. We had the .com crash here, and then we had an upturn here in 2003 that lasted 4.5 years, and that is pretty fair. And I think they say the normal average length of a bull market is somewhere around 36 to 40 months. So this was within average. Now, what we saw here, of course, if you have studied a bit of your financial history, you know that it was a housing bubble and a credit bubble and so on. But what we saw was something that for us graph traders were quite nice, because we saw an upturn, new higher bottom here. Then we saw a level top, a new but lower bottom, and that was the first thing that told us now you should be careful. If you didn't get out here, then of course we had a new lower top, and you could get out here. You could even get out here, but you could miss a lot of this bear market by just looking at a graph. And from the top to the bottom here was something like 55%, something like that. And the year, actually, if we just looked at 2008 here, it was down something like 35%, something like that. But all over, it was 55% from a top to a bottom. All right, but it came slowly, kind of. I know there were weeks here with the 9% and one with 20% down, but take a mental picture of this setup and then look at the current setup. We had actually something that looked like the top, and that was here in 18 and 19, where we started to show lower tops, we started to show lower bottoms, and this was Q4 in 2018, and I was pretty sure that that was the top, that we should go down from there. However, that came some tax reforms and some different stuff there. That came before. What we saw here was, of course, the Fed announcement that things were actually so bad in the US economy that they would consider lowering the interest rates in 2019. The second they said that, the prices simply shot up directly here. Otherwise, if they had kept the interest at a normal level, a neutral level, I am pretty sure we would have seen some downturn here. But you could say that this up run here, bull run in the market, have been an artificial bull run on steroids, and these at some point simply die. And this is what has happened here. What we are seeing, in my opinion, is a kind of a perfect storm of some sort, where we have an overextended bull run, I would say. You can see if a normal bull run lasts 3 years, 3.5 years, and here from the bottom in 09, we have had something like 11 years up run. Someone would say that this was actually the beginning of a bear market, so maybe it is only 5 years, but still it is way overextended compared to the average. So what we are seeing here is a devastating drop that was extremely hard to see coming, even for someone looking at a graph like me. I did, however, get out, and my subscribers got out, most of them, pretty quickly up here when the drop started, because we started to get sell signals. But still, some of them held on to some stocks, and that had been quite expensive. So this drop was very, very much different than the one in 08, because it just came out of the blue. It was, of course, the illness from China. It was the oil price war from Russia and Saudi Arabia. It was the overextended market. It was a market that in 09 shot up with something like 25-27%, and the average earnings only performed around 1 to 2% better overall over the year. So you could say that we have been running on the fumes in the gas tank here for a while, and now the balloon popped. Now, is this the drop we are going to see? Is this the bottom? I have no idea. And as I said in the beginning, nobody knows. But I do have some thoughts about it that I would like to share with you just quickly. And that is that it is quite obvious, if you are looking at the overall price level on the stock market, comparing it to the earnings in the companies, you can see that the stock market has been running somewhat faster over the last year. So you could say that the PE ratio on average have gotten a bit bigger. The investors have been willing to pay more dollars for each dollar on the bottom line. That can easily be justified because we have had these extremely low interest rates. So that means that it is a bit easier to earn your money back, and of course the interest you lose by not investing in a bank or putting your money in the bank is next to zero. So that can easily justify a higher PE ratio. However, normally a stock market, of course, is moving in cycles. They have been doing that always, and they will do that always. Ups, downs all the time, and no one can predict exactly when the ups and downs are coming. However, over a long period of time, there is some midline where you can see that it is oscillating around. And what we can see right now is kind of a natural oscillation, kind of a natural cycle that just have come way faster than we have seen before. So it's simply collapsed here, and this is down to kind of the normal point where you would expect to see this movement maybe over a bit longer time span, but they would over some sort of time get down to a point before it could move up again. Now the reason, and I mentioned that in the video the other day where I talked about oil stocks and the oil collapse and the Chinese illness and so on, is the collapse here, of course, is caused by this perfect storm. And what we need to consider is exactly what I mentioned in the video the other day, and that is that we are seeing an extreme disruption of a huge amount of different industries and sectors. Just take the airlines, take the entire oil industry, the financial sector that has financed the oil industry, the hotel chains, the amusement parks, the whatever, hairdressers, and everything you can imagine is being stirred up right now. And the reason for this quick drop is primarily that no financial expert, no financial model knows how to price this disruption correctly. So the financial sector is running by better safe than sorry, and therefore they are dropping everything they have. And that's a reason for the speed, as far as I can tell. And of course, we don't know how this illness spreads in society. We're going to see some, I hope, or not hope, but I think we're going to see some really devastating counts of this illness in the United States in the upcoming days when they really get the test kits out and running. But I hope it is not going to be as bad as I fear, but I'm not certain that we would like to see the numbers when they get published. So what I think we're going to see is that, and this is just my guess, I have no way of knowing this, but this is kind of the macroeconomic picture I'm building in my head to assess if I should go in now or if I should wait a bit. And what I think is that what we have seen here, the first drop, is you could say the normal business cycle, stock market cycle drop that you would expect. It came quicker, but it would have come sooner or later, just over maybe a bit longer time span here in 2020. What I think we're going to see now is that in Q1, Q2, probably also Q3 and 4, we are going to see some really bad results from the numbers when the fiscal numbers are coming, when the quarterly numbers are coming from the companies. And we are going to see large companies simply collapse if they don't get some sort of government bailouts. I don't know which companies it is, but that is one of the reasons why also the stocks are dropping so much, is that the financial analysts have no way of knowing how much the different industries, sectors, and specific companies will be hit. So what I fear a bit is that we might see a little bounce here, but then we'll see a lot of people saying, now I can get out with a little less loss, or I may be breaking even from somewhere I bought here in 18 where I have made money but been sitting on a loss the last couple of weeks, and now I'm out and break even. So now I'm pulling all my money out just to see where's this thing going. So I could definitely fear that we should have a move further down. And that can be 5%, it can be 10%, it can be 20%. I have no way of knowing that. I know people working with all sorts of Fibonacci ratios and so on, trying to figure out how far we should go down or up. I'm not a big fan of that, to be honest. So what I am doing is that I'm observing the market, and right now, let me just have a look at the daily chart here. right now, what we can see is, first of all, we had the halt in trading 2 times yesterday. First in the pre-market when they stopped the futures trading, when that dropped 5%, and then the halt in the normal opening hours of the market, because the prices dropped, the index dropped 7%. Then they are halting. They're simply stopping the trading, and the reason is a lesson learned. Actually all the way back from 87, but also in the crash in 2000, 2001, and also the financial crisis. And that is, since more and more trading is being done by algorithms, then they are making these halts to make all the algorithm runners being aware of this, so they can adjust their algorithms and seeing if they really want to keep selling, or if this is just a computer program running wild. So we saw that a halt in the stock market twice in one day. That is absolutely unheard of. I know the system is not extremely old. I think it is from somewhere after the financial crisis. I don't remember if it's from 2010 or 13 or something like that. Doesn't matter. But we saw it 2 times in one day, and that is the first time in the history of the system that has occurred. What I will observe right now is how the different market participants are going in and out of the market. This is on a daily chart, but to get some sort of idea of the psychology in the market, I sometimes go down and say what is happening on the 4 hour, maybe the 1 hour. Are we seeing some sort of jump up and then the sellers just are selling out, or what are we seeing? So that is intraday. It's not that I'm trading the indices intraday, but I'm trying to evaluate the strength and the weaknesses on the buyers and the sellers side in the market. And right now they are a bit indecisive. I think the market jumped up, then it was sold down here, and I was just about to get nervous that it would keep on selling. Right now it seems like the buyers are coming a bit in, but the market is pretty early on here. We just started about an hour ago or so, and I'm not sure what it's called in other countries, but in Denmark we call these first hour and a half for the crazy hour. That is where some weird movements often happen, and all the quote unquote dumb money is running into the market or out of the market. And I often look more at the end hours of the day, what is happening in the last 2 or 3 hours of the day, to evaluate where are the big guys positioning themselves in the market. So as I said, I am absolutely no expert in knowing if we have hit the bottom or if we are going to go straight up from here. What I can see is, though, that what I consider being the triggers of this rundown we have had, that is the spread of the illness, and it is the oil price war. None of these factors have disappeared, and I'm not sure about the old oil price war, but at least the spreading of the illness in United States, but also Europe, where Denmark, where I'm sitting, is pretty much shut down. The entire public sector has been shut down, and in Norway as well, and Italy. If that rolls out in United States as well, and we all of a sudden see a complete shutdown of entire cities and systems and government structures, then I think we will see some more nervousness getting into the market. And we could see the VIX index yesterday hitting something like 75 or something like that. And the last time that happened was when the Lehman Brothers and Bear Stearns, all the crashes, the financial crashes in 2008. So this is really interesting times. I'm not sure you can call them interesting, not in a good way anyway. I can say I'm looking at the market without sweating too much, because I only have a minuscule position left in the market, and then I am right now trading a little bit of forex currency pairs, and they are in a break even, but it's up around 5.5% for March right now, and up somewhere like 10 or 12% for the year so far. So that has been very, very good with these volatile markets, and a good supplement to a dropping market. All right. That was it. I needed to get this off my chest. all of these experts, so-called experts, are saying this is the bottom for certain. And just to clarify, they haven't got a clue. And I know they're trying to sell their expertise, but remember, if you're meeting one of these claiming to know where the bottom is, then remember to ask them, did you call the top as well? All right, that's it for now. Take care of your money out there, and I will get back to you hopefully later today, or maybe in the weekend, with some of the stocks and the sectors that I am looking at right now in this market in free fall. All right, that's all for now. Have a nice weekend when you get to that, and talk to you soon. Bye.